And the final one of the day, well, then again, maybe I'll be doing a breaking news video. You never know. Realtor sees troubling downturn in Toronto housing as sales drop 44%. New data, this is from Greg Bonnell, reporter from BNN.ca or Canada. New data suggests the rapid decline in Toronto home sales is accelerating, and at least one housing bear sees a Canadian real estate correction of up to 40% coming. The country's largest housing market took an abrupt turn from record highs on the heels of Ontario's 16 measures to cool housing, with sales falling 20% and new listings soaring almost 50% across the greater Toronto area in May. In other words, sell. We want out now. John Pasalis, president and broker at REALIST, has crunched the early numbers for June, and sees a troubling plunge in transactions. He says people are just pulling back. It was a really wild swing. Who knows where it's going to go? A lot of this is driven by market psychology. REALIST's research suggests sales of freehold homes across the Greater Toronto Area are down some 39% so far in June. And for the week ended June 9th, sales volumes plummeted 44% compared to the same period in 2016. When it comes to new listings of freeholds, they rose 34% last week, according to REALIST. Pasalis notes the growth rate in new listings has actually been on the decline for the past 4 weeks, but added in an email that he considers the rapid decline in sales more troubling than the rise in inventory. In the condo market, they saw a 22% pullback in sales last week and an 11% rise in new listings. Again, this is across the board. Condos, houses, doesn't matter. Just like the real estate bust last time, it didn't matter. All that got nailed. Speaking of get nailed, there was a, well, I don't know what the hell you call it, place where you go get your nails done as women. And it was in St. Pete, Florida. And it was called Get Nailed. I could just see myself walking up in there. Yeah, hello, ladies. I'm here to get nailed, or vice versa. Oh, fingernails. Sorry about that. Peace. I'm out. Sorry about that. I got another one for you. There was a meat company, I don't know if there was meat packing or whatever they did. Meat company. They sold meats, and they'd have a box truck, with a little air conditioner and stuff on it, and their motto on the side of the truck. I'm not making this up, by the way. This is a true story. Both of these. You can beat our prices, but you can't beat our meat. Stuff like that you just can never forget. You know what I mean? Now, that's one hell of a logo. So anyways, back to where I was. This is a short one. The plunge in June sales was not uniform across the GTA. REALIST says the drop is more pronounced in outlying communities such as Markham and Richmond Hill, up to 60% year over year. The firm's earlier research suggested heightened speculative behavior in those communities. Long-standing housing bear David Medani, senior Canadian economist at Capital Economics, told BNN in an interview to Monday that in a speculative housing bubble, once prices stop going up, the whole reason for speculating in the market disappears. It isn't about interest rates. Medani expects sales to continue to weaken as more prospective buyers take a wait-and-see approach and listings to climb as homeowners look to cash out. On that basis, I expect prices to continue to decline over the long term, said Medani. I see a correction of between 20 to 40% in the Canadian housing market over 5 years. I'd like to see a 20 to 40% correction on all housing in about a year or two from now, to be honest with you, because they're way overpriced. And again, even if you're happy, oh, my house is overpriced, I can sell, make some money. Okay, sell, make some money, and then go buy a new house. Only to find out it's so overpriced, what the hell am I supposed to do? I can't buy that house, too expensive. what I just did as a real estate transaction selling my house to get into that house, it doesn't even make sense anymore. I should just kept my old house. Yeah, sorry about that. Unless you can sell it and rent, pay the high rent for a year or two, and then get into a house, capitalize on the 20 to 40% drop that we're probably going to see. Could be more brutal. Who knows? I'm out. Take care.